First of all, thanks to Mitch for that. I've learned a lot about SPACs in the last few minutes from Mitch, so that's all good. I'm down to speak for 20 minutes. I will not be speaking for 20 minutes. I'm going to give you a lot of time back. My name is Gary Quinn. I am Vice Chairman at Cohen Capital Markets, as well as Chairman and CEO of Columbus Circle Capital SPAC. As you can probably hear from my accent, I'm Irish, but I've spent more time out of Ireland than I did in it, but I can't do anything about the accent. Let me just see that. Okay. You guys have slides from me? I've got Mitch's slides. I can go through them again.
Green button, please.
Okay. Thank you. Okay, so I asked my team to put together a few slides for me. So, typical of investment banking slides, nobody can actually read the detail. So I'll try to go over it on a high level at least. Thanks, guys. I'll give you back the room really quickly. Just bear with me. So I'm going to try to cover a quick overview of SPAC momentum, particularly in the last year. We have been hearing about the return of the regular way IPO for the last 4 years, and the market is about to open. And to be fair, and I know there's only 19 regular way IPOs, as Mitch told us, but we are seeing some green shoots here with Circle, etc., going public. But these companies are the darlings of the street. And behind them, there is a significant backlog. So unless you're a portfolio company of KKR or SoftBank, you're probably not going public until Q4 2026 if you're beginning now on a regular way IPO. Currently, there are over 300 companies publicly on file to IPO, with another 1,000 more confidentially on file. These, for the most part, are mature companies, mostly with revenues, EBITDA, audit ready, and they're seeking to go public for real reasons, to facilitate financing. Thanks, guys. I'll be quick. All right? They're looking to go public to facilitate financing and consolidation. All real reasons to go public. For these companies facing such a long wait to go public on a regular way it's too long. So doing a SPAC merger is not only a viable alternative for these guys, it's probably the only way they're going to IPO in the next year. And this issue is exacerbated at the moment by potential trade wars and real war drums in the Middle East. So for so many companies, a SPAC merger really does make the most sense. So as a result of this, and positive regulatory tailwinds around certain sectors such as crypto, we've seen a return of high-quality sponsor teams to the SPAC market. Churchill Capital, Tain, etc. As Mitch said, so far this year, there have been 56 SPAC IPOs versus 57 for all of 24. These sponsor teams have been prioritizing SPAC targets in desirable industries with solid revenue, profitability, and long-term growth potential. And so within that, SPACs are taking advantage of thematic tailwinds throughout the broader capital markets, specifically around crypto, digital assets, rare earths, nuclear opportunities. We've seen several success stories among SPACs taking advantage of these tailwinds, particularly in the Bitcoin space, with recent announcements. Cantor Equity Partners being the forerunner here with their announced transaction with 21 Capital and $585 million of additional capital through their convert and their pipe. Sorry, guys. All of which is going to be used to buy Bitcoin. Additionally, that SPAC is currently trading at $35. Outside of crypto, several other fundamentally strong deals have recently been announced. Cohen Circle announced a deal with Kyivstar, the digital infrastructure player in Eastern Europe, with $560 million of EBITDA. HCM2 announced a deal with Terrestrial Energy, a nuclear energy company, alongside a $50 million pipe. Additionally, we have seen better performance recently from closed transactions. Webull, a retail trading platform, was a success story that switched from a traditional IPO to a de-SPAC because they didn't want to wait as long as they were told. This public company was able to benefit after the de-SPAC from a really strong retail following. I'll come back to that in a minute. USA Rare Earths, another example. A US magnet and rare earth company. They raised a $50 million convert with their de-SPAC and raised a further $75 million equity pipe a month after closing. So now we know that unlike in 2021, this is a demand-led SPAC market. There are a lot of good companies out there that want to go public, and a SPAC merger is probably their only viable short to medium term option to do so. We know that really good sponsor teams are back in the market and doing deals successfully with quality targets in interesting sectors. But within that, what are some of the differentiators or key drivers that these teams are bringing to the table to facilitate successful de-SPACs in 2025? Number one, retail support. If it is possible to generate retail support around the story, it can create momentum and liquidity. We saw this around the CEP Bitcoin story. Additionally, it helps to cycle out traditional SPAC investors, leading in turn to lower redemption numbers at de-SPAC. Not a point that it is often given enough attention. Developing institutional support, investment from strategics, related parties and/or institutional investors validates the equity story and the valuation metrics. Do not wait until the last few weeks before beginning a wider investor relations outreach. And finally, be thoughtful about technicals. Ensure that the sponsor and target are appropriately locked up post de-SPAC to tell the right story in the market. Where possible, put in place structures to create a healthy float post de-SPAC. A good example here was where Black Spade put in place a non-redemption agreement with a number of their shareholders, giving them a meaningful dividend while locking them in for 60 days post de-SPAC, ensuring that there was minimum cash at the de-SPAC. So to wrap up, there are many companies that want to go public at the moment. A de-SPAC is often their only viable option in the short to medium term. As a result, there has been a resurgence in good sponsors coming back to the market to list new SPACs. But when it comes time to de-SPAC, success won't happen by accident. Be thoughtful and be commercially pragmatic. Thank you.